Hello, everyone. Jason here with Levelhead Trading, going into my technical analysis on Tesla and what's been building up pressure during the last probably about 2 weeks now. So here we are. As I mentioned before, the most important thing is the higher lows. You don't want to break to a lower low on this way up. So here is on the daily chart. I just drew this rough line here along the bottom using pretty much these two as my points of reference and then just extending it out. And it comes pretty close to the lows here. And so I'm going to leave it like that. I'm going to leave this line here for my up and coming videos, at least for a while, and just show the reaction of however it plays out with Tesla here. So looking strictly at the daily chart, we're still chopping around. We did manage to make a higher high here, not quite getting into this zone. We missed it by about 50 cents or so. The low end here, using this low of that candle, was 206.27, and the high on that day yesterday, we got up to 205.60. So that exceeded this high here of 203.17. So that's good, right? So you're making slightly higher high, and hopefully we're establishing a base of support on these lows right here. So the lowest of the lows was 189.13. So as a stop loss, if I were entering fresh positions without already owning some, I would have to use that as my stop loss, 189 and whatever I said, 189.13. So you could use this, the next level here, which was 191.36. That's actually the low of that candle. This was almost a double bottom. That was 191.50. So technically speaking, this is the higher low. Just like you made a slightly higher high by about $2, you made a higher low technically as 191.36 compared to the 189.13. So very similar, right? You broke above slightly and you created a higher low slightly relative to that one. But I would just use that as my stop loss if I were entering any new positions, 189.13. So that's about 6% to the downside, but I still think it's very good risk reward because ultimately what you want to see happen is that we get up to the 200-day moving average, which at this current time would be about $234. So if that worked out that way, you'd be having a potential reward of about $32 and you're risking about $13. So that's how I would play that. So the next thing I want to talk about is the exponential lines. So, we might still trade um, back and forth between the lows here and the highs here to finish the week. We might not get any conclusive answer as to where Tesla's going at the moment. But also, potentially, this could be a daily bull flag. So, tomorrow, potentially, could be a move where we then finally push up into this area here. That would be really nice. And if that were to happen, then notice how we got the 12 period getting closer and closer to the 26 period because we're holding these levels. And if we can push to a higher high, then that'll be great because that will eventually cause this to cross over. So we're not extended by any means on the RSI levels on the daily. We're at 52 and the average is at 43.9. So I like that. This is slowly, the average is slowly getting curving upwards. So that's really, really good. So again, the base of support here, we need to hold that. You don't want to break below this line. You could have a day where you maybe touch it and maybe create a wick and then finish back above it. That would be fine also. So not sure what's going to happen. Nothing is for sure, but it could be that we just trade tomorrow, Thursday, and Friday within this area here and we don't find out anything really until next week. Or it could happen, tomorrow and Friday, where we do hopefully push out and then get back into this range, which would be the 38.2 retracement. So that's how it looks on the daily chart. And then just briefly going into the weekly chart, using the lowest of those lows right here on the weekly chart, that's what I would use again as my stop loss, 189.13. And the weekly candle is completely engulfing last week's. So to me, that's a clear higher low, that 189.13, even though I mentioned the 191 area. But on the weekly chart, that would be the level to say, okay, that's the weekly higher low, because we did push to a higher high than the previous high of that week, which was in between this. So we have the date, we have the weekly inside bar to that, but we did push above that. So that's also a really good sign. And but notice that when we did get to the high, that lined up pretty close to the 12 period exponential line on the weekly chart. So not surprising that, that's not going to be easy to penetrate through. So we've got 2 more days in the week to go, and it'll we might get a result as to what's going to happen in the near term, or it might still be trading sideways. That's pretty much it. In the bigger picture, again, if we have much stronger upside, then I would anticipate. And I want to make a note that the 200-week moving average and the 200-day moving average are really at the same price. So I kind of like that. They both are lining up as a potential level to reach, which would be a 61.8% retracement if we were to get up there, which is about 233, 234. So again, everything looks good, working our way slowly up there. And here on the weekly chart, 43.7 on the RSI, and the average is slightly higher because we had such a big move up. It takes a lot to make that moving average go down. So on the weekly chart, we're catching up to the average, and on the daily, we are above the average, right? I think that's what it is. Yeah. So that's pretty much it. Don't really have much more to add. I'm going to make a new video on the Chinese market, because that's another one that I'm stalking, and have a small position in that. But that's going to be FXI, which is kind of the big cap companies in the Chinese market. So I'm going to make a video about that, and make a new video on Boeing. I'm going to do one of them today, probably the FXI, see if I get any interest in that. So if you like what you see and you're not subscribed already, go ahead and click wherever it is on here, and I'll see you again.